Hey traders, Jason Leavitt, Leavitt Brothers. In this video, I'm going to do a few more trade examples. Okay, nothing fancy here. I don't claim to know everything about trading, and you know what? You don't need to know everything. All you need is a simple strategy that works, something that can be duplicated. Okay, this is how I operate. Hopefully, there's a nugget or two in here that helps you out. Okay, you could copy off me a little bit. You can grab a little nugget and say, hey, I'm going to incorporate that, or you could say, it's not my style. I'm going to do something else. Okay. But, it helps to expose yourself to the way other people trade, and you might pick up a little thing here or there. All right, so let's go through a few examples. All right, here is RRR, Red Rocks Resort. So what I see here is first, on all these charts, on all these stocks, I have the daily on the left and the hourly on the right. I have the MACD and stochastic as the indicators, and then on the charts, I have 200-day moving average, 50, and then the 8 and 21. All right, so what I see here is I see a stock that came down. We have an MACD cross here, and then we have kind of a breakout from the stochastic here. Okay, so that's right there. Okay, so MACD crosses up and stays in the crossed up direction. This is where I get my trend from. And then I use the stochastic as a timing mechanism within the trend. So as long as this stays crossed up, I'm going to look for the stochastic to cycle down, both on the daily and the hourly. So I come up here to the price chart. We have a resistance level here. So we have stock pops off its low, base is here. Okay, so I'm going to be, as long as this stays in the crossed up direction here, I'm going to be looking for pullbacks within this base. So if I come over here to the hourly chart, what I see here is a little bit of a divergence. Okay, MACD histogram. There's your divergence. Notice how the stock comes up here and then sits on top of the moving averages. Okay, this to me was, could have been an entry because you have the MACD crosses up here and the stochastic is moving up there. Okay, it breaks out of this little range, comes up. It actually comes all the way back down. If you got stopped out, you got stopped out. You can re-enter. But given that the 200 on the hourly chart was pretty good resistance there, and given that it became support here, I think it was a good level to look at right there. So it came down, touched the 200, moved up, where the MACD crosses back up. Stochastic is pointing up. Okay, so you have your entry there, and then obviously the stock did very well after that. Okay, and then also this is all taking place within the vantage point of the frame of reference of this being a resistance line. So this is just a base at a slightly higher level off the low, and as long as the MACD on the daily chart is pointing up, I'm using the hourly chart to time an entry. Okay, and I prefer to get in before resistance is taken out. I'd rather get in over here, because then if it comes in here, breaks out and comes back in, at least I can take a small profit. Okay, if I'm always chasing up here, then every time a failed breakout takes place, then I'm losing money. So I'd prefer to start a position within the pattern and then add when it breaks out, and that's what was possible here. All right, here's SIG, jewelry store. So what we have here is we have a cross up here, MACD, stochastic pointing up. This thing breaks out of a base here, consolidation pattern at a higher level. We have a resistance level here. Now, MACD crossed back down and it crossed back up. It was minor. We have a breakout here in the stochastic. So as soon as we get the MACD crosses back up here, the stock is back in play. Okay, sometimes I look at for like an ABC pattern with the MACD. So if it starts over here, we have like an A, B, and then C. So I looked for that kind of a sequence. So that's what happened here when it crossed up, came back down, and then reasserted itself. So the stock became playable in here when the MACD crossed back up and the stochastic was trending up. So I zoom into the hourly chart. And what I see here is we see the MACD crossed up here, stochastic was here. It stayed, so the MACD, we have what I call a kiss trade, where the MACD comes up, it comes down and kisses its signal line, and then it reasserts itself. Notice also that SIG moved up, and notice how it sat above its 21 moving average. Okay, I see this all the time. It comes up, test the moving average. While it's testing the moving average, the MACD comes down and kisses. Sometimes you get a cycle down to the stochastic. Sometimes it just sits at a high level. And then this obviously reasserted itself, and then we have a resistance level up here. Okay, so again, if you're looking to buy, as I do, if I'm looking to buy in the within the pattern, instead of waiting till it breaks out, I get a bias from the hourly chart, the MACD, where like over here it becomes in play. I zoom in, I see that it came down or came up, went up, came down, tested the 21 at the same time the MACD came down and kissed here. Stochastic pointing up here, so you kind of get the green light to get long in here, and then you could add as the stock breaks out, and the stock did really well this week. All right, next chart is play, Dave & Buster's. All right, so we got a cross up here, stochastic pointing up there, MACD stayed in the crossed up direction. Okay, so then over here it is consolidating at a slightly higher level off the low. Okay, so this forms my bias. I want to zoom in. I want to look for entries within this range that give me a reasonable, that I can enter, one, where my stop is reasonable, and two, when it's likely the stock is going to break out. Okay, so what I saw here is over here we have this crosses up, stochastic pointing up, kind of breaks out of a little bit of a range here. Okay, and this actually takes place at the same time. We got a little breakout here from the stochastic. This one actually didn't work out, so it broke out. It looked pretty good. It was trading above the highs over here, but it fell back down and actually fell below what I would consider the entry. So you can stop out, step aside, let the dust settle, and then see if a new pattern forms. And what we have here is we got a cross up here. Stochastic is pointing up. Notice how the stock moves up here and then sits above the moving averages, and then it moves up again and once again sits above the moving averages. And all this is taking place where the MACD over here crossed up. We got a kiss here, we got a kiss here, and there are just entries. There are entries. We got stochastic coming up here, stochastic coming up here. Okay, so your bias is here, bias is from over here. Got a nice breakout here. That first trade didn't work. Stand aside, lose 50 cents or something. Stand aside, see what happens, and then you have two more entries here. One entry is stochastic. This is pointing up. So then the timing mechanism that we use is the stochastic, and we get some entries there. All right, next up, this is ZI. This trade ultimately needed to be exited because of earnings, but it doesn't take away from the fact that the setup was there. All right, so you have MACD lines converging, and then we get a cross here. We get a little bit of a breakout to a higher high right here. So MACD crossed up, stochastic took out the previous high and is trending up. You got a breakout here on the daily chart. So if I zoom in on the hourly, okay, you got a cross up here. You got this is trending up. Notice how it comes up, comes down, gets support at the 21. Notice how we got a little kiss here from the MACD, stochastic pointing up. Everything looks really good, but then they had earnings, and so you just needed to, you kind of knew when the stock was up here, you knew that like I need to be out within the next day or so. So your stop has to be really, really tight. You don't have any, you're not going to give it much space because you don't have much time. But it doesn't take away from the trade that was actually really nicely set up, which is why I'm using it here as an example. Bias over here, bias partly from here because that's pointing up, going to the hourly chart, and you got entries here with this crossing up and this pointing up. Kiss here, like everything's in place. Moving averages supporting it, everything's in place. But with earnings looming, it was just a quick trade if you even took the trade in the first place. All right, one more chart. BJ's restaurant. So what we have here is we have cross from the stochastic or cross from the MACD. As this jumped off a low, we got a little bit of consolidation pattern at a slightly higher level. MACD pointing in the up direction. Okay. Stochastic broke a support line here, so we're going to have a little bit of a consolidation pattern, but it comes down while this is staying in the crossed up direction. This comes down, cycles, and then reasserts itself. So somewhere in here, okay, we're going to get a buy signal, so we can zoom in on the hourly chart to look for an entry. You can see it has nice support at the hourly 200. We have a resistance level here. MACD lines getting closer and closer together. Finally cross here. Stochastic, which broke out of a resistance here and was crossing up. So it's like the combination of like finding support here, breaking out, MACD crossing up right here, stochastic breaking out and going up there. Everything was in place to get long. MACD stays in the crossed up direction, so that you have like, entry there, entry there, entry there, because again, the MACD is your bias, your stochastic is your timing mechanism. So if you project those up, you have like entries here, here, and then if you want to chase it, I guess you'd be over here, but to me that's a little too far already, because over here is over here. Okay, so nothing fancy. Okay, I want to trend on the daily chart, and then I zoom in and find entries on the hourly. The MACD in most cases defines the trend, while the stochastic is used as a timing mechanism within the trend. All right, thanks for listening. Come check us out at Leavitt Brothers, where we offer market analysis and trading ideas to the financial community. Also, check out my free masterclass in trading class at the link below. All right, see you next time.